Hi, everyone. Today, let's talk about the debt crisis once again. Then we'll get into the economic data. Then we'll get into the charts. And then we'll go over my results for the week and my thoughts going into the Monday session. Don't forget to check out the Patreon and the Twitter. And if you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So talking about the debt crisis one more time, Speaker McCarthy came out and said that debt negotiations have stalled as Joe Biden has left for the G7 summit. He's scheduled to return today, so we'll see how that plays out. But he also mentioned that he's not concerned about negotiations. Of course, they've bickered back and forth. McCarthy said that Joe Biden took a step back in terms of negotiations. And then Joe Biden came out and said that Republicans took a step back, saying that they're not willing to bend on their demands in terms of getting something passed in both houses of Congress. But at this point, it seems like both sides are not willing to concede anything. The Senate hasn't passed anything. The House at least passed something, but it seems unlikely that that bill would pass in the Senate and actually make it to the president's desk. And no changes to that bill have been made to try to make it at least a little bit appealing to Democrats. And lastly, just as a reminder, Janet Yellen said that 1 June is the earliest date that the government would run out of money, but some estimates say that we could make it all the way through July. Moving over to the economic calendar, you can see just a couple of FOMC members speaking on Monday. Bullard is always a little bit interesting. He's one of the most hawkish. Looking at Tuesday, we got building permits, services PMI, and new home sales. Moving over to Wednesday, we have Janet Yellen speaking in the morning. She's been saying some interesting things about regional banks. We'll see if she says anything about that. That could definitely impact markets, but most likely she's just going to talk about the debt crisis. And then in the afternoon here, we have the FOMC minutes. That usually has a pretty strong impact on the markets at 1400 Eastern on Wednesday. And then on Thursday here, we have GDP, first quarter preliminaries, jobless claims always, and then pending home sales. And then moving to Friday, we have a big day here. So we have core durables, core PCE, headline durables, and then headline PCE. So big data coming out here at 8:30 on Friday. Moving over to earnings for this week, we got the heavy hitters on Monday being Zoom, Tuesday, Intuit, Lowe's, Palo Alto, AutoZone. Wednesday, we got a big one here with NVIDIA. And then Thursday, we got Costco, Medtronic, Autodesk, Dollar Tree, fairly interesting. Best Buy sometimes has good moves also. And then on Friday, PDD and Marvel. Moving over to Fed futures here, you can actually see we stepped up massively on Friday towards that pause. That was fairly interesting. We'll see how that plays out with Janet Yellen's comments, as well as the FOMC minutes coming out this week. Moving to September here, you can see this is still a pause, and this percentage has actually gone up quite a bit. And then that first cut here is still scheduled for November based on the market expectation. And then looking at December, we're expecting a second cut. So 2 cuts this year is the expectation, but they did move back a little bit. Moving over to the charts, starting with the S&Ps here on the weekly view, you can see we're actually kind of in no man's land, still in the middle of this range. And if we zoom in here, you can see we're still below these previous highs. We are testing them, but we're below. Momentum did step up, and RSI does look a little bit more bullish. So looking to see if this breaks out. If it does, that next upward price target would be around 43.50 on the weekly view. We do have some key resistance here at 42.60, but if this continues to rally, you would expect at least 2 weeks of upside potential up to that key resistance. And this is the longer term trend line, which does have a lot of touch points throughout the last couple decades. So to summarize here, very similar to what we've been seeing, we're at key resistance, momentum still bullish, indicating that we should be seeing higher prices. We'll see if that comes to fruition. This also looks like a low, higher low setup based on these wicks. And if this continues to rally here, that does make sense. But like I said, definitely some key resistance we need to continue to watch in the short term. Moving over to the daily chart here, you can see we are in this uptrend. We're above all of the EMAs and SMAs on the daily. We did get above this previous high, and it looks like we're kind of retesting that level now. We're not below it, so we could still absolutely move up to fill this gap, which definitely looks like it's going to happen next week. That's at 421.85 to get a retest of the body of the candle here. And then if that level breaks, then we're watching for the August high up at 430. We do have some trend lines of resistance in here around 425 to 426, depending on when we touch those levels. But right now, momentum is definitely bullish. RSI pulling back a little bit, but volume is increasing on this rally, meaning that it's most likely going to have some follow through. So overall, still looking pretty bullish here on the SPY. Moving over here to the NASDAQ, I want to highlight this longer term trend line. Marks the bottoms here in 2011 as well as 2012. Marks a bottom here in September, tops in April as well as September 2016. Multiple contacts here in 2018 as well as 2019. So pretty well recognized trend line. Usually when you add a new trend line, you want to make sure that it's very well defined. If most people can't see it, then it's probably not going to be respected by the markets. But this seems like a fairly well respected trend line over time. And looking at the NASDAQ here, you can see we came right to that point and paused. So it's not the major trend line that I watched. That's this one. We did come up to that point, respect it multiple times, and then we got the breakout. Now we're at this other trend line, which seems somewhat respectable. It's fairly interesting. And we stopped right at that point here. So we're waiting to see if this breaks. If it breaks, then we can see a push up to this next trend line, which there is a lot of room here on the weekly chart. Similar to the SPY, we got a step up. RSI also looks bullish. But like I said, on the SPY, we're at key resistance with lots of bullish momentum. If this is a low, higher low setup with very little weakness at resistance, and this does get a continuation, this could certainly go much higher, much faster. Moving over to the daily chart, you can see we have taken out the August high at this point, and now I'm looking to the high of this consolidation going back to April, which is at 446.87. So that's a pretty substantial move. There's a little bit of chop in this area, so you could certainly hang out, move between the zone for a while here. But you can see we've definitely broken through this level. We're holding above it, similar to the SPY. We have not retested it here. We also have a medium-term trend line here marking a potential support area in this zone. So definitely looks bullish. Maybe we get a bit of a retrace, test this level, then we get a continuation up to 346. If this level breaks down, we have the 9 EMA and trend support sitting down at 328.54. Looking at momentum, definitely bullish. RSI very overbought here, so that's something to pay attention to. Volume was building on this rally, did step down slightly on the last candle of the day, so potentially some selling there. Obviously a bearish candle, so keeping an eye on this. A little bit overbought. Last time we got some overbought conditions, we did have a fairly substantial pullback, but it was just a pullback, and then we ended up getting a continuation and higher highs. Moving over to the Russell now on the daily chart. This actually looks quite a bit stronger than it has recently for me. So it kind of looks like a double bottom. You have that first wick low in a rally, and we come back into the zone, wick low, gap up, rally. We're now above my first level of resistance at 176 here on the daily chart. Above that, we have 179 marking these tops in this mid zone from the double bottom. If this level breaks, we have the 200 SMA at 180.74, and then above that, we have 183.28. This is the peak high going back to July of 22, and there's quite a few gaps through this zone, somewhat respected. If you don't have that level, there's a lot of space here up to the next level. So watching this as a midpoint, 200 SMA, still looks bullish. Momentum is bullish. RSI pulling back a little bit, but the SMA on RSI is moving higher. So overall, neutral to bullish. We're at support, back testing this downtrend line as well. I would expect this to move higher into the zone, 179.17 or 183.28 as my next two upper levels. Moving over to the Dow here on the daily chart, you can see we have this trend line marking the bottoms here in October, marking the bottoms here in March. We're getting very close to that zone here now. We get a pullback into this area and this level starts to hold, and this bullish rising wedge starts to break out. Hold this zone, push higher here. That would be pretty interesting. We've been in this zone for a long time on the Dow, and we are sloping down in the short term, but this is starting to look like a bullish rising wedge. This is definitely starting to look like a bull flag. Momentum ticking towards bullish. You can see the rally we had up into resistance. We did get a decent rejection from here, which is interesting, but RSI crossed over the SMA. We're retesting that level here now. And if this starts to rally from there, that's going to be very bullish in my opinion. Watching 335.91 to the upside. which we did test last week. If that level breaks, 339.11, and then we have 343.23 above that, going up to the highs from February. Moving over to some key indicators here, starting with the equal weighted S&Ps on the weekly chart with the regular S&Ps laid over top of it. You can see we were right on top of everything for a while, and you could actually make the argument on this kind of medium time frame that the regular S&Ps are actually catching up to the equal weighted S&Ps, which is interesting because once we zoom in here to the daily chart, you can see it looks more like the regular S&Ps are taking off versus the equal weighted S&Ps. So this is a little bit of a perspective play. On the weekly chart, over a longer time frame, it does look like they're kind of in a similar spot here, but definitely on the shorter time frame, just like we talked about last week, the regular S&Ps are moving much higher in the short term, whereas the equal weighted S&Ps look more similar to the Dow in this kind of bull flag type setup, trending downwards, but potentially finding some support at this medium time frame trend line. So overall, still separation on the daily chart, but it doesn't look nearly as bad on the weekly chart. Moving over to copper versus gold overlaid with the S&Ps. We used this ratio last week as well, and I wanted to highlight it again here because it's not the same thesis as the equal weighted S&Ps. So this is the weekly chart. This is over a longer time frame. And you can see here they're right on top of each other in that clear separation that takes place early in March. S&Ps going much higher, economic factors going lower. Looks like we're set to take out this previous low here in July. If this breaks down, there's quite a bit of room to the downside potentially on this ratio, which to me does mean that this might be a bit of a false rally, definitely being taken over by tech. We've talked about that before, but this ratio is waterfalling off here. We had a grouping of all the EMAs and SMAs, and then we broke down from that level. And like I said, looking to see if this level breaks down and moves back down to these previous lows going back to August of 2019, again, showing economic weakness. Moving over to the ratios, starting with the SPX divided by the M2 money supply. And I actually put the regular S&Ps on top of this just to see if I could find any kind of correlation. And what I found was kind of interesting here. So you can see the ratio outperforming during the rally. And then you have this consolidation where they're right on top of each other, marking that same high going back to the pre-COVID highs. And then you see the ratio start to underperform, pulling much lower than the S&Ps. It almost feels like a little bit of a lead indicator here. If this ratio is climbing and it's climbing above the S&Ps, then you would expect the S&Ps to follow. And then same thesis here to the downside. You can see the regular S&Ps were marking the tops, whereas the ratio was moving much lower. And right now, I want to highlight that you can see price on this ratio is actually going above what we're seeing on the S&Ps, potentially indicating that this is going to go higher as a lead indicator. So we'll see how that plays out. I'm still expecting to get up to this previous level now that we've broken that 1992 level. So 2050 is the next stop. We're at a key trend line on a potential bearish rising wedge, but we're waiting to see if that culminates. If we get that overthrow and then a breakdown, that would be super bearish. But like I said, this is kind of leading me to believe that we have a little bit more upside, at least in the short term. And then if we start to see this ratio break down below the S&Ps, that could be a lead indicator to the downside like we saw here in the downturn last year. So something to watch for, and I'll keep you updated on this chart. Overall, looks bullish. We're at key resistance, but I would expect to break out from this level, moving up to that 2050 mark. Moving over to the NASDAQ divided by the SPY here, I just want to highlight this channel that we had basically throughout the 2010s, rallying in this zone, finding support, and then breaking out here in January and February of 2020. Then we got the significant down move last year, moving through this channel and then breaking down here to that 2.81 level. But the important part here is that we've moved back into this channel and we're back at the upper range here, just like we tested in August of 22. So August high, current high, trend line, definitely key resistance here. You also have 3.31 as a key resistance zone. So maybe we get a slight overthrow of the trend. And then if this pulls back down here, that would be pretty bearish. So overall, definitely watching to see if this level holds. And if it breaks down from this zone and the NASDAQ is no longer leading us to the upside, I think that'll probably be a setup for at least a short-term pullback, if not a bigger down move. Moving over to the Dow divided by the Russell, this is one we haven't talked about recently, but it is interesting. I do want to highlight that we've been in this bullish channel, but we're starting to see some lower highs setting up, not retesting the upper trend line in this channel. And if this starts to break down here, as it is doing at least in the short term, we have momentum turning down, RSI retesting the SMA. That would be a pretty decent indicator that we might be seeing a little bit of outperformance from the Russell, which is supported by what we saw on the Russell charts. So Russell charts looking a little bit more bullish, the Dow starting to pull back a little bit, which might be a little bit of a risk on play actually for those smaller cap stocks. Moving over to SPX divided by gold, you can see SPX starting to outperform a little bit more here. So now we have a low, higher low setup. We're waiting to see if this ends up generating a lower high or if this breaks out and starts to make higher highs versus this high here in February. This is the weekly chart, so we're definitely seeing higher highs in the shorter time frames, but we're waiting to see if this longer term downtrend starts to break. You can see we have that clear trend resistance up around 2351, which is right on top of the 55 EMA at 2348. So clearly some resistance on the medium time frames, but overall short-term bullish here on SPX versus gold. Moving over to Apple here on the daily chart. This is pretty interesting here. So this kind of looks like a giant bull flag, which is interesting. Tops, tap that bottom, and now we're breaking out of the top of this giant bull flag type setup. To me, it doesn't necessarily mean that we're going to rally and make this huge move, because in a bull flag type setup, your price target is the run up into the flag, which is very substantial from where we're at right now. So I don't necessarily think that that is going to happen, but it is worth noting that we have broken out of the top of this channel. We are now marking the highs going back to August. We touched that level, got a little bit of rejection. Now above that, we have the highs going back to April at 178.58. And then above that, we have all-time highs sitting at 182.37. So very, very close to all-time highs here on Apple. Zooming in a little bit, you can see we have very clear grinding price action on the RSI, staying between that 50 and 70 level, channeling upwards, which is exactly what we're getting here. And until this breaks down, you have to assume that we're just going to get a little bit of a pullback off of that August high, hit these trend lines, and then probably get a continuation higher up to the April highs. Moving over to Tesla here, you can see we are still uptrending on the shorter time frame. This is the daily chart. We're above all the EMAs, looking up to that SMA at 202.87. We do have a key resistance at 188.50, but we're above the 55.21, 144.9, as well as VWAP. So we're definitely short-term bullish. We have a low, higher low setup. And like I said, we broke out of this trend line here, which was marking this shorter term downtrend. Now we're waiting to see what happens at 188.50 on the medium time frame. Above that, we have 197.78, which marks most of the tops here going back to mid-March. If we don't take out this high, it's still going to be a high, lower high setup. And if it breaks down from there, then you would be expecting a low, lower low down at trend support, potentially down here at around 136, 137, which would give you the gap fill going back to January. So be careful here. We are short-term bullish, but like I said, if we get that lower high, that's going to be a pretty bearish setup. Moving over to consumer staples versus consumer discretionary, you can see staples have been downtrending. We talked about this setting up off of key resistance. We have lots of bearish momentum, RSI breaking down below the 50 line. Does still kind of look like a bull flag, testing support, holding in the zone. We see a little bit of a breakout. Maybe we see some new highs here on staples. But right now, definitely in this kind of a downtrend, waiting to see if this holds. Maybe we break this level and retest some of these EMAs before we see a little bit of a breakout. So still in a holding pattern, waiting to see what happens there. But what's interesting is that discretionary, on the other hand, has reestablished this channel. Going back to these previous lows, we saw choppiness in this zone. This lower trend line was holding. Now we're rallying pretty close to that upper trend line, have a little bit of room to go before we hit it. So overall bullish, we're holding at the midpoint on this trend. If this holds, like I said, I think we'll hit that upper trend line just above my horizontal resistance at 153.90. Maybe we get up to 155.30. That would be interesting. But overall, discretionary, bullish momentum, bullish RSI, definite outperformance in discretionary versus staples. Moving over to technology and communications, these have been the top performing sectors if you exclude semiconductors, which we will talk about next. But looking at technology, we're looking for that gap fill going back to April. We missed it by just a few cents to the body of the candle. We did go wick to wick, but I usually like to see a touch of the body. Zooming in here, we were watching this as a bearish rising wedge, looking to see a retest of that 160.16 level as that key resistance. That would give us the gap fill, a key resistance, and then a potential for a pullback, which would indicate more bullishness. The Friday candle was a doji, so you could certainly see a pullback. We just get an overthrow of this trend, and then we pull back to trend support at 153.50. And then if that breaks down, then this is a true bearish rising wedge. Communication, on the other hand, significantly less strong, mainly because of Facebook, in my opinion. You can see we did take out the August high, and we did take out the highs from June as well. We have a lot of room to the upside before we're starting to get into those April highs, which are all the way up around $70, currently sitting at 61.41. In terms of structure, this is kind of starting to tighten in terms of a channel. It is still a channel, but it's tightening a little bit with these peaks being a little bit lower. Maybe this extends out here now that we're up at this level, and that looks a little bit better here. So watching that key resistance, we'll see if this breaks out up to 63.99. That would be interesting. But if we do pull back, there's quite a bit of downside before we hit trend support. We also have that highly traded zone down here at 58.91. Momentum is still bearish, and RSI is starting to pull back from overbought conditions. This comes back down to the SMA. That would give you the pullback, which is interesting. So key resistance, still bullish, maybe looking for at least a shorter term pullback on the communication sector. Moving over to semiconductors, you can see we are right here at my key resistance, 133.32. We closed just below that level. That's basically the mid-range from this consolidation as well as these previous consolidations. Fairly interesting. It's above these previous highs, so we do have a higher high now. We have a low, high, higher high setting up, looking up to 140.04. That's the highs going back to March here. Talked about this being a very strong sector. Momentum flipping bullish. RSI also flipping bullish. Back above the SMA. Looks good here to the upside in the medium time frame. Moving over to the daily chart, you can see that breakout, what it looks like here, taking out these highs at that key support. Looks like a breakout, retest, potential continuation. If it breaks down from this level and gets back below the trend, that would put us down to 128.63 before we got major support, in my opinion. We do have these previous highs at 131.14, but I would be watching for that 128.63 level. And you can see those previous highs are actually marked by this trend support as well. So fairly interesting. Also looking at momentum, super bullish still. RSI hitting overbought conditions. So maybe we see a little bit of a pullback to the SMA. That would be interesting. We did have building momentum from Tuesday, Wednesday, Thursday, and then a pretty significant pullback in momentum. So watching for that to start stepping up again. If we start to see a continuation rally, that would give us some follow through to the upside, in my opinion. But if this continues to stay low and we start to see more of a pullback, and then we start to see that volume pick up as we are pulling back, that would be a pretty bearish indicator. Moving over to transports here, I just want to highlight that this is super neutral at this point. The RSI has been bouncing around that 50 line, not doing much of anything for multiple weeks in a row here. We are below short-term resistance and this medium trend line and this longer-term trend line, waiting to see if that holds. If we break out from this zone, maybe we start to see more bullishness. And it does seem possible based on this last move, but like I said, RSI still jumping above and below that 50 line, SMA right at the 50 line, not giving us any clear direction on transports. Moving over to yields here at the 2-year and the 10-year, you can see these continue to move higher here, taking out their previous highs. 10-year showing even more strength, pushing up to that 3 3/4 area. And to me, this is starting to price in another potential rate hike in June. We talked about the Fed futures swinging back towards a pause, but you can see here yields moving higher in the short term. So that might mean that people are selling out of bonds, potentially moving back into equities as a possibility, or that we're really just pricing in that next step from the Fed. And that to me would be bearish for equities, which is interesting considering the bullishness that we've seen across most of the major markets over the last week. Moving over to stocks above their 50-day and 200-day averages here, you can see 50-day continuing to make lower highs, and this looks like another lower high. If we start to see another pullback, that would be interesting. Could set up as a higher low based on the depth of this previous down move. That would be interesting, but right now I am expecting this to still move down at least a little bit in the shorter term. Moving over to the 200-day average, you can see this previous high in March and April of 21, and then we started to see that bigger pullback. Got a very strong double bottom, which has presented this previous rally here. Now this kind of looks like a bit of a bull flag type setup. I do have a head and shoulders on here, which I am still watching. I do think this might pull back to this zone, and if it breaks down from here, we could see a bigger substantial move down to these previous lows. Certainly a possibility here. But this is still presenting bearish, right? So we have bearish momentum. RSI did get below the 50 line and it's still holding there. If we come back up and retest the SMA and reject from there, that would be interesting. But if we do break out above the SMA, that would indicate a flip to bullishness then, because we would have a low and a higher low on RSI. So watching this one fairly closely, even if price takes out this previous low, but we get some increased strength on RSI, that would be a pretty bullish indicator. But right now, we're still not getting clear direction, holding above 43.55, waiting to see if we get that bigger move down. But if this holds and we break this trend line, that's going to be a bullish indicator, and I'll be watching that going into the next week. Moving over to the dollar here on the weekly chart, you can see these longer term trend lines sitting in this zone. We didn't quite retest them, but we did get a break higher from that area. We also have that medium term downtrend line, which we did get above here. We're now at that 103.64 level for the test of the week. We're a little bit below that now, but we're above the 9 and 21 EMAs, indicating a short-term bullish trend. Momentum also bullish. RSI ticking towards bullish above the SMA. We'd like to see it get above that 50 line to confirm a little bit more bullishness, but right now, definitely chopping in a zone, looking like a bullish move within that zone right now, going into the next week. Moving over to junk bonds and TLT here, you can see junk continuing to roll over 3 bearish weeks in a row. We're below this trend line, slightly below my 91 level, just by 1 penny here. If that continues lower to these previous lows at 89, that would be interesting. Might find some support at 90, but overall, this still looks bearish to me. Momentum, definitely bearish. RSI, bearish. We have volume picking up as price is moving lower. Definitely not what you would want to see if you're bullish here on junk. Moving over to TLT, looks like an absolute dumpster fire here. 3 bearish weeks, big bearish movement. Last time we had a candle like this, you can see here in February, we got a big continuation. Did throw a wick at the end, but then continued even lower. If this move takes out this previous midpoint here in March and February, then you have to expect that this is going to move much lower down to 96.50. Certainly could find some support at this previous wick and this gap lower here. But overall, this looks super bearish. Momentum ticking down, RSI ticking down, step up on volume as price is moving lower, and I would expect this to continue down next week. Moving over to the bond volatility as well as the S&P volatility, you can see here that bond volatility did have a big spike here in March. It's since come down and we're setting up a higher low here from this previous low. We are below this main trend line. If this breaks back above, maybe we see volatility start to tick higher. That would be interesting. But right now it's fairly neutral. We're right at the 50 line on RSI. Momentum is basically 0. So not much here on bond volatility. VIX, on the other hand, we have a low, higher low setup. Watching to see if this area holds right around that 1575 level. If we break out from this shorter term downtrend line, get above 1850, that would be pretty bearish. But right now we're still chopping in this zone. And until we get a break one way or the other, we don't have any direction quite yet. Looking at my accounts, obviously no change from the Friday session, but I have one put here on the Russell down at 174, just for a small credit here on my IRA. And then my Qs position, I have 3 puts and 2 calls. All of these are in a slight profit already because the market did not really move on Friday. We'll see how this plays out. I have about 1% protection to the up and to the downside for Monday. I don't think we'll get a big move on Monday unless we start to see some bearishness come through because of the comments on the debt ceiling issues. But overall, I'm still slightly bullish, but mostly neutral because of those key resistance areas that we're in basically across the markets. Let me know down in the comment section what you thought of the debt ceiling crisis or any of the charts, or if there's any charts I need to be watching that I'm not, definitely put those in the description as well. Otherwise, if you got any value out of today's video, definitely like and subscribe and hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.